I have been thinking a lot about Bitcoin and its demand drivers. Why would someone want to hold it? And that is what I'm going to talk about in this video. So Bitcoin is a speculative asset and one that has performed really well over the last 13 plus years, going from about $42 in June 2011 to about $55,000 at the time of recording of this video. And this is despite its volatility and the significant decreases in value that it experiences during bear markets. Because of this performance, there is demand for Bitcoin among retail investors, institutional investors, and sophisticated investors. People buy Bitcoin and hold it, expecting its price to go up over time. According to Glassnode, which is a blockchain analytics company, in April of this year, about 66% of all Bitcoin in circulation had been lying dormant in wallets for more than 1 year. And in November last year, Glassnode revealed that more than 41% of all Bitcoin in circulation had been lying in wallets for more than 3 years. This means that the Bitcoin that is available for trading is a small percentage of what could be available. This creates scarcity, and as long as there is high demand for Bitcoin, the scarcity of Bitcoin will help its price in the long term. Bitcoin is also considered a store of value. However, it is an unreliable one. A store of value is an asset, a currency, or even a commodity that maintains its value over time or whose value increases over time. Bitcoin is able to function as a store of value, but it depends on when you buy and sell Bitcoin. So let's say I bought Bitcoin in April of last year and I've been holding it since then. The value of my Bitcoin has gone up over time. But if I bought Bitcoin in April of this year, when it was about 73,000, and I'm still holding it, that Bitcoin has lost value because its current price is about 55 to 56,000. Despite how unreliable it is as a store of value, there is still demand for it. Bitcoin is also considered a hedge against inflation. However, this is a role that it also performs unreliably. Pre-2020, when the price movements of Bitcoin were not correlated with external factors such as the monetary policies of different countries, it performed this role really well. But post-2020, it has not been able to. As rates of inflation have increased, the price of Bitcoin has also gone down. However, there is some nuance in this as well. In countries where the rate of inflation has outpaced the price movements of Bitcoin or the rate by which Bitcoin has lost value, Bitcoin is still considered a reliable and effective hedge against inflation, especially in countries that have experienced economic instability, currency devaluation, and hyperinflation. Countries in South America like Venezuela and Argentina, countries in Africa like Nigeria, and some countries in Asia. In these countries, there is high demand for Bitcoin. Now, in countries that have robust currencies or whose currencies are resistant to hyperinflation, countries like the US, Bitcoin isn't really considered a hedge against inflation. So you may be wondering, okay, if the US dollar are robust to inflation, why isn't the demand for them greater in countries experiencing hyperinflation? Why is there more demand for Bitcoin than for the US dollar, for example? Well, one of these reasons, though it isn't universal, is that there are tight capital controls in these countries. So there is a limit to how much foreign exchange can enter and leave the country and how much foreign exchange a citizen has access to. So in countries with limited options, Bitcoin has emerged as a lifeline. Bitcoin is also considered a medium of exchange, but this is a role that it performs poorly. There are so many other cryptocurrencies, ETH, XRP, BNB, Litecoin, Nano, Bitcoin Cash, Solana, that have higher transaction speeds and low to no transaction costs. Nevertheless, this is a demand driver for Bitcoin, although it is a very, very weak one. The last thing I want to talk about is Bitcoin's role in an emerging Bitcoin ecosystem. Bitcoin has several limitations, and to address those limitations, scaling solutions that give it greater functionality have been developed. These scaling solutions include layer 2 solutions, as well as sidechains like the Merlin chain, BitLayer, and Stacks. Protocols are being built on some of these scaling solutions. As the Bitcoin ecosystem expands, this could lead to network effects. And these occur when the utility of a platform increases as more participants join it. And this could lead to an enhanced experience for all the users of that platform. So in Bitcoin's case, as more scaling solutions are developed, which might appeal to different kinds of users and developers, there will be an increase in the number of protocols in the Bitcoin ecosystem. This could draw users and even more developers to the ecosystem, creating a feedback loop that strengthens Bitcoin's network, but could also potentially increase the value of Bitcoin. Now, there are a limited number of Bitcoin. There will only ever be 21 million Bitcoin in existence. And also remember that most people who buy Bitcoin decide to hold it. And as there is increased demand for Bitcoin because of an expansion of the Bitcoin ecosystem, it will bode well for the price in the long term, potentially. So I think these are compelling reasons to consider Bitcoin in the short term as well as the long term. So this is all that I have for you today. Thank you so much for watching. Thank you so much for listening. I will catch you in the next one.